Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this channel, I show you the companies I look at in terms of investing in dividends, creating that portfolio to create that passive income. I also dabble on growth stocks and even sometimes penny stocks. So if that is something you're interested in, uh, please hit that subscribe button. Don't forget to hit the notification bell, and also do me a favor, hit that like button. Helps the channel grow. Um, with that said, please remember this is not financial advice. This is just me sharing. In this video, I'm going to talk to you about 3 best dividend stocks to create that passive income. There's many different ways to create passive income using dividend companies. I'm going to show you 3 companies that I think that might be worthy for you to go check out. With that said, let's take a look at the first one. First on the list, Federal Realty, ticker symbol is FRT. This is a real estate investment trust, engages in the ownership, management, and redevelopment of high quality retail properties. So you can see from the website, they are a company that invests in realty property. So you can see from there, you can see Richmond, Virginia, you can see California, and all sorts of other places that you can see San Jose. Now, if we look at Yahoo Finance, some of the information in here are pretty good. You can see earnings, 4 beats for the past quarters. Financials seem pretty good. It looked like it went down from here from 2019 to 2020. It was going up from 2017 to 2019 and then back down. But revenue still beats the earnings. You can see 827 million. Earnings about 131. Looking down to the recommended trends, you can see a mixture of holds and some buy and some strong buys. Now, the rating is between a buy and a hold, and then the price target right now, the average is 132. Currently, it's about 125. Now, if we look to tip ranks, analysis rating, rated as a moderate buy, there's 6. It's a mixture between 3 buy and 3 holds. Price target is about 133 with a 5% upside. Highest price target you can see 140, 133 would be the average, and then the lowest would be 125. So currently right now it is about 125. Now if you look at the stock analysis, you can see Smart Score rated as a 9, which is outperformed. So you want to get it around these things, so it's good. Hedge fund activity, the trend has been increased. You can see hedge funds have bought 93 shares last quarter. Now, if we look at Market Watch, you can see from the balance sheet, cash only 798 million. Cash and short-term investment, you can see 798. Looking down to the total assets, you can see the assets would be 7.6 billion. Going down further to the total liabilities, total liabilities is 4.92 billion. So those are the stuff. So if you look at, there was an article of Monthly Fool, and it talks about how there's 3 great REITs for low risk investors. So if you look at this article, the first one they talked about is FRT. So you can see the undisputed king of REITs is Federal Realty with a huge 54 consecutive annual dividend hikes under its belt. So it's the longest streak of any REITs, including my favorite, Realty Income. So the current dividend yield is roughly about 3.3 compared to the S&P 500 index of 1.3 yield. So that's pretty generous. Now, if we look down through it, you can see another one is the Realty Income. So it's one of my favorite companies to invest in as well. Now, if we look at Simply Safe Dividend, you can see the dividend Growth, last 20 years, not so great. 4%, which is slow. Last 5 years, 3%, which is slow, but uninterrupted dividend streak, 53 years without a reduction. So that is pretty key. Consecutively for 53 years. So payment details, you can see quarterly, you got January, April, July, and October. Your annual payout would be $4.28 shares. So each quarter you'll get about $1.07. And then remember, ex-dividend date is December 31st, so it's 1 month away. Now if we and then you get your payout of January 18th. So next on the list is Lowe's. Ticker symbol is LOW. So this is a company that engages in the retail sale of home improvement products. So again, one of my favorite companies to invest on. Great company. I buy a lot of my stuff in Lowe's. So if you haven't invested on it, do your research and check this company out. In my opinion, it is a solid company. Now, if you look at tip ranks, based on tip ranks, their analysis is a strong buy, 14 rating. You got 11 buy and 3 holds. 275 and with 11% upside. So you can see the highest would be 295. The average is 275 and the low is 240. Currently, right now, it's about 248. So if you look at the stock analysis, you can see Smart Score based it at 10, which is outperformed. Hedge fund activity has increased, so they bought about 173.5K shares last quarter. Now, if we look at Yahoo Finance, check out this 5-year chart. You can see beautiful up, and then there was a dip on March 1st, 2020. After that, it's just been a rocket, been going up. You can see performance outlook is bullish. Going down to the earnings, you can see beats for the past 4 quarters. And then the revenue has been going up. So you can see it went down on 2020, well, kind of stagnant. And then it's just 2021 has been great, 89 billion, and the earnings is 5 billion. Now looking down to the trends, 13 hold, 10 buys, and 8 strong buys with the recommendation of strong buy and a buy. Price target, the average is 267, and you got your current of 248. Now, if we go to Webull, you can see based on 33 analysis, they rated it as a buy as well. So, rate between strong buy and a buy. The high is pretty much the same. You got 300, 267, and 200 is a low with the current of 248. Going down to the institutional holdings, you can see kind of like a mixture. So some have increased and some have decreased. Some of them are sold out. You got 93 sold out, 824 decrease, 124 is new. Now, if we look at CNN Business, you can see again pretty much the same with a high of 300, medium of 279, then a low of 230 with the recommend trade of 19 buy, 1 sell. Wow, and 8 outperform, 8 holds and 5 outperform. Now, if we look at Simply Say Dividend safety score is very safe. With a rating of 93, the dividend yield is 1.29, market cap is about 167. Going down, you can see payout ratio is 24. Now, this is where I like it. Dividend growth streak, check that out, 23% the past 20 years. So that's very fast. Look at the 5-year one, 17%. Check out this chart. You can see it's just boom. So if you were one of those guys that bought it in 2020, 2002, look at that, beautiful. 58 years without a reduction and 58 years consecutively increase. So beautiful. That's what I like about this company. Payout, you got quarterly, you got February, May, August, and November. Annual payout is $3.20. Now, if we look at the Simply Wall Street, it is only undervalued 5%, so it is pretty expensive at this point. Still cheaper then but 5% fair value. So fair value would have been 262. Currently, it's about 248. So I would rather have it in the double digits, 14%, something in that nature. But you know, still is a great company to invest on, in my opinion. Last on the list, McDonald's. Ticker symbol is MCD. This engages in a company franchising a restaurant. So I love McDonald's. It's a great place to get a quick bite to eat, as well as to invest on, in my opinion. Now, if we look at tip ranks, their rating is a strong buy, 23, 19 buy, 4 holds, with the price target of 273. Currently, right now, it's about 248. They say it's about 9% upside. Highest price target is 306. 273 would be the average, and 233 would be the low average. If you look at the stock analysis, it's about 7 neutral, but hedge fund activity has been increased, so pretty good. If you look at the Yahoo Finance, you can see, look at that, 5 years, beautiful upward trend. Again, March 1st went down. So if you bought it on March 1st, about 165, pretty much you made good profits. Looking down to the earnings, you can see Q4 2020 was a miss, but other than that, it's been beat. Annual financials has been great. You can see 2020, 19 revenue billions, and then 4 billion for the earnings. Now, if we look at Simply Safe dividend safety score is 77, which is safe. Your dividend yield is 2.21. Market cap is about 187. Payout ratio, you got 59%. Now, if you look at the dividend growth streak, another one that I like. So if you invested it 20 years ago, 70% per year, which is very fast. Pretty good. Last 5 years, 8%. 48 years, 46 years without a reduction. So that's awesome. And then you get your dividend growth streak of 46 years without consecutive increases. So your payout ratio would be quarterly, March, June, September, and December, with the annual payout of $5.52. So remember, each quarter you get about $1.38 per share. So ex-dividend date is today, November 30th. So then you get your payout December 15th. Now, if we look at bar chart, again, their current is strong buy based on 27 analysis. High target price is 306. Low, it will be 230. If you look at the rating breakdown, 7 hold, 2 moderate buy, 18 strong buy. Now, if we look at Simply Wall Street, based on their valuation, it is overvalued, almost about 8% overvalued. So fair value would have been 232. Current price is about 250. So in my opinion, it's pretty expensive right now. So if you're trying to enter and buy McDonald's, in my opinion, I would wait for a dip, get a little bit cheaper, because right now it is overvalued, in my opinion. All right, guys, that's pretty much it. Thank you so much for watching. Hope you like this video. If you do, give it a thumbs up. As always, please be safe out there. Stay cool, keep investing, and I'll catch you guys on the next video. All right, take care. Aloha.